They say that 99% of gamblers quit before they make it big. You see this picture? I unironically think of this pick every time I'm about to give up on something, such as my stock picks, or just anything in general. I've been investing in the stock market for about 4 years now. I started investing during university. I'd save money for my job, then put some of it into my savings, pay for necessities, and then the rest would go into the stock market. I remember the first stock I ever bought was QuantumScape in 2021, ticker QS. I bought here, and then I sold here. Yeah, I sold at a loss, but despite this, and losing a bunch of money, I think investing in the market is pretty fun, so here's why.
Woo! Yeah, baby! That's what I've been waiting for. That's what it's all about. Woo!
Do I have to say it? Risk-taking behavior is fun, especially when the risk-taking behavior can 10 to 100x your net value. You see, I'm actually pretty good with my money, at least I think I am. I try to be financially responsible and not spend my money on unnecessary things, most of the time. But to further illustrate my financial responsibility, I must admit to one thing. I enjoy gacha games. Well, the games themselves aren't really that fun, but pulling for characters and stuff is. Yet, I've spent $0 on any of the gacha games I've ever played. See, certified, not a degenerate. However, I'm still immortal. I, along with every other human on this planet, have a natural predisposition to enjoy degenerative, risk-taking behavior. Putting myself in a situation or engaging with something where the outcome is unpredictable, but still overcoming the odds and winning, man bro, just shoot me in the head with a 12-gauge slug of dopamine. Just like how there are various ways to gamble, like poker, sports gambling, slot machines, etc., there are different ways to invest your money based on your risk tolerance. Like high risk equals high returns, low risk, low returns. You have ETFs and index funds, stocks, and options. ETFs are like a bag of multiple stocks, so instead of diversifying your portfolio by buying a bunch of individual stocks, you just buy one of these, and it's essentially doing it for you. There's a lot less risk, but it takes a lot more time to grow your money. And stocks are a piece of a company. The value of this piece will go up or down depending on how the company's doing, along with a ton of other factors. And this generally has, medium risk. And then there are options. They're kind of like stock, but with a multiplier and a time limit. You essentially have to predict whether a stock will go up or down. Calls are for when you think it'll go up, puts when you think it'll go down. Because there's a multiplier, your gains will be a lot higher, but your losses can be a lot more violent. And unlike a stock where if it goes down, you could just hold on to it forever, where it could eventually go up, options have an expiration date, so if you lose your money, there's no real riding it out. So you gotta correctly predict the direction of the stock and when it'll get there. And this has the highest risk, but the highest reward. And investing in the stock market is gambling, but with extra steps. The steps are just designed to increase your chances of making money. You get all the benefits of gambling with slightly less risk. If you do it right and you're patient, you'll actually make money. So take out a few loans and bet the mortgage on 10x leverage out of the money Tesla call options expiring tomorrow. Don't worry, margin calls aren't real. There's always stuff going on, especially in the world of business and finance. Will the market crash? Are we on the next generational bull run? What do you mean I'm able to finance a pizza with 6 interest-free payments? So many questions and so much stuff to keep up with, all of which affects the market. This is what makes everything so interesting and exciting. With social media and online news, you're able to be caught up on and informed about anything and everything you want to know. It definitely has to do with the fact that it's your money on the line, and you don't want to invest your money in a company that'll take it and light it on fire, i.e. the Enron treatment.
38 counts of fraud and conspiracy.
Lawyers for Jeffrey Skilling and Kenneth Lay threw around complicated notions about margin calls and short selling.
So you're out here analyzing financial statements and going on market research deep dives. One moment you're checking Apple's stock price, and the next you're 3 hours into a rabbit hole about whether or not China is going to invade Taiwan, semiconductor supply chain logistics, and if Tim Cook drinks oat milk. There are a ton of resources out there like Bloomberg, the Financial Times, Hindenburg Research, and those finance bros on YouTube who say the market is crashing every other day. The market is never-ending drama. You really never know what's going to happen, so you gotta keep up with everything. One day crypto is the future, and then the next FTX collapses and people lose millions. Like 20% of my portfolio is in an ETF called the EUFN. It tracks the European financial sector, and it's been popping off due to the recent beef between Donald T and Europe. On the other hand, at Nvidia's recent GTC, Jensen Huang cooked my quantum computing stocks. Happens. I know some people would find this pretty stressful and all. It is their money, but I find it pretty fun to navigate the chaos that is modern business and finance. It's pretty satisfying watching my hard-earned money go up. It's kind of like watching a plant grow, except, once in a while the plant will light itself on fire or something. As a zoomer, it's good to know that I'm actually being somewhat responsible with my financial choices. At least I have some level of financial literacy, and I'm not going to let my money get eaten by inflation. And despite the market being a roller coaster, investing offers pretty tangible rewards. Stocks have a track record of delivering returns that make the savings account you have look like it's on life support. Over the past 20 years, large domestic stocks have provided an an average annualized return of about 9.7%. As I said, it's like planting a money tree and watching it grow. On top of that, holding stocks for a long term can lead to capital appreciation and dividend income, which is pretty good for your financial well-being. Quick aside, and I have to talk about this because there's been recent news. I think we're probably reaching the end times, because recently DoorDash and Klarna looked at the economy and said, yeah, people are definitely too broke to afford their pad thai all at once, so let's split it into 4 easy payments. Because, nothing screams strong financial future like financing a cheeseburger over 6 weeks. It's pretty dystopian that we're financing food now. Like today, it's breaking your Chipotle bowl into 4 payments, and tomorrow, we're applying for a 30-year mortgage on a large Domino's pizza. Like imagine banks foreclosing over, Taco Bell Deluxe Chalupa boxes. When people have to structure their finances around a plate of nachos, we are one bad earnings report away from bartering for great value cereal. Like enjoy your installment plan sushi while you can, because at this rate, the next step is 401k plans that match in Chili's Big Smasher meals. At the end of the day, investing is kind of fun, not just because of the potential gains, but because of the experience itself. The thrill of risk, the drama of the market, and the satisfaction of seeing your money grow, hopefully. It makes it pretty engaging and pretty satisfying. It feels a lot better than sports betting my life savings away or crypto rug pulling someone. Sure, sometimes it feels like I'm just mining diamonds in the dark, but that's part of the game. You do your research, take your chances, and you stick it out. And who knows? Maybe one day you'll look back and realize you were just a few good swings away from making it big. Or, you could just use the money to finance your morning coffee and 4 easy payments and call it a day. What do I know?